We're just talking about geopolitics. I mean, how do traders, do traders need to pretty much work out just how worried they should be when it comes to geopolitics? In this case, the North Korean situation.
They have to be very worried, because if a problem occurs in Korea, South Korea is in trouble, and South Korea is a major market for emerging markets, at least. So yes, they have to look at this more and more. And what is also becoming more important, and what we're focusing on now, is governance. The whole issue of corporate governance. How are these companies operating? Are they obeying the laws? And what's happening in Malaysia now, I think, is very critical in this regard, because as Dr. Mahathir said, we want the rule of law to prevail. And that's terrific for business. So any country that's moving in that direction is very, very good.
But the meeting is on again and off again. What if the summit is really canceled? What impact will that have on the market?
I think the market is assuming that it could go either way. So they've already discounted that. But the fact that it's gone this far is a very, very positive development. The fact that they've at least talked about the possibility of meeting in Singapore is terrific. And I believe that eventually this will take place. Maybe not in Singapore, but in another place.
Mark, this is David in Hong Kong. Before we just continue the conversation, let me just get this to our viewers as well. We were talking about some breaking news. Shares of Standard Chartered now in Hong Kong spiking. We're now up $3 here. That's on news, of course. You see at the bottom of your screens from the FT now that Barclays is said to be exploring a potential merger with its rivals, particularly, as you can see there with Standard Chartered. There we go. Shares listed here in Hong Kong, up now 3.3%. And it's fairly clear from that chart when, of course, this information made its way into the public space. So we'll get you more details again on that. But up Standard Chartered, there we go, up close to 4% now at this point in time. Let's bring in Mark Mobius yet again. He's with us over in Singapore. Mark, we were talking about South Korea a few moments ago. How do you trade something binary like that? Something that may or may not happen. I mean, if let's say you already have exposure to South Korea on hopes that it might happen, do you necessarily have to reduce your exposure because we're hearing all these headlines?
No, I mean, there's a good reason to hold and even maybe increase the amount you have in South Korea, simply because the possibility of some merger with the North, of them reaching an accommodation with the North, is very, very positive for South Korea. But besides that, there are a lot of things happening in South Korea, particularly as regards to corporate governance. The changes that are taking place in companies like Samsung, Hyundai, and so forth are going to be very, very important for shareholders of these companies and other companies in Korea.
How long do you think that process is going to take? I was actually going to ask you about that, because this whole, the pressure on the chaebol started a few years ago. We've started to see some traction there. They've started giving out more special dividends, what have you. At what point do you think, say, corporate governance in South Korea would, I guess, be at par with, say, developed markets?
I think it's going to take years. It's a long-term process. But the good news is that the Korean public is now behind this. And the Korean government is, of course, under pressure to make sure that these companies behave. In the past, it was us foreign shareholders would come in and say, look, you should change this, change that. But that was rejected by most people in Korea because there's a nationalist sentiment. Now it's the public and the government that's really behind this movement. And it's very, very good, I think.